Good morning, good afternoon, good evening. Hello everyone. Thanks for joining in for webinar today. My name is Puneet. I am co-presenter for today's webinar. I have with me Mr. Rajshekhar Maya. Maya has been a veteran in banking technology space with over 20 years of experience and has worked with banks in over 50 countries in getting their core as well as digital transformation right. In today's webinar, he's going to share his experiences of working with banks across various countries firsthand, as well as talk about how banks can get their digital transformation right. To begin, I would like to share some house rules. This is going to be a silent presentation, but at the same time, we would like to have lots of interaction going in. So feel free to ask as many questions as you have during the session to us. We would take multiple breaks in between to answer those questions. So questions would be answered during the course of the session, not necessarily only at the end. Also, we would be monitoring our Twitter stream on Truly Digital. Feel free to share your comments and questions there. We would be happy to answer them here in the webinar as well as post-webinar on this Twitter stream. The entire session will be recorded and you would be gaining the full recording as well as slides for the session via email. So we can focus on having a good conversation. You can avoid spending time on taking notes. And if you have any other expectation from the webinar which did not get covered in 1 hour, feel free to write to us. We would be very happy to have one-on-one conversations with you and answer any questions or inquiries that you may have. With this, we'll get started. So what are we going to cover or uncover in this webinar? First of all, we'll briefly talk about what are the characteristics of today's successful digital businesses. Then we will focus on what banks can learn from these businesses. Every bank we know on this earth is doing digital transformation. But we know some are getting it right and many are not. So we'll talk about what do we believe a bank needs to focus on to get the digital banking transformation right. And we would have many case studies of banks who are doing it successfully so that all of us have some of those best practices and learning which we can carry back to our institutions. With that, let's get started.
Thanks, Puneet. Thanks for your time and introduction. Good morning, good afternoon, and people on the call, on the WebEx. Welcome to the webinar. Let me start off giving you a perspective about what's happening globally and what we are witnessing as an industry solution provider. To start off by giving a perspective around what is hitting other industries before coming to the banking industry. If you look at on this slide, we have highlighted 4 industries specifically. An industry which is into hospitality and hotels. The second industry is in transportation. The third industry is in telecommunication, and the fourth is in retail. Unfortunately or fortunately, each of these industries is getting disrupted massively by the digital interruptions. First and foremost, Airbnb. As you witnessed, they have more than 2 million listings on their website, and they are present in more than 37,000 cities. And their valuation is around more than $25 billion. The closest to that valuation is probably JW Marriott. This is forcing a lot of these traditional brick and mortar hotel industries and hotel providers to think differently. And one of the results is that recently you would have read a news item where the Starwood got acquired by JW Marriott. The second industry which is getting disrupted is transportation. We have taken the example of Uber here, which has more than billion rides completed in the last 2 years. They have more than million drivers listed on their website, and they are present in more than 317 cities. And they claim to solve the global problems around traffic and pollution. Their valuation is around $68 billion, which is more than the Ford and the GM and the Honda and other companies put together. The third industry is the telecommunication industry. If you look at WhatsApp, which has almost 1 billion subscribers, and they provide free services. Analysts were predicting till last year that the telecommunication industry is going to grow its revenues and income because of the texting. But unfortunately, with the invention of WhatsApp, their business is suffering almost to the tune of $300 billion every year. And what happened? WhatsApp got acquired for almost $19 billion, and they are disrupting the telecommunication industry. The last industry which is getting disrupted by digital interruption is the retail industry. I think everybody would have heard about Alibaba, and this company has more than 1 million products listed on their website, starting from helicopter to an hairpin, and they are present in 217 countries, and they have the largest corporate IPO being taken into the market with $25 billion. Continuing with that retail disruption, if you look at Alibaba, they're famous for their Singles Day sale. In 2013, on a single day of 24 hours, they did $5.93 billion of revenue. 2014, they did almost $9.43 billion of revenue. In 2015, November, they did almost $14.73 billion of revenue on a single day, which is much more than all the Black Friday and Cyber Monday sales of all the eBays and Amazons and all of the other websites put together. Most surprisingly, this entity does almost 60% of their sales through mobile, and all the payments for these transactions happens through their own mobile app called as Alipay. Surprisingly, this Alipay is also the third largest asset under management company when it comes to in terms of managing the mutual funds in China. They almost manage $100 billion, the third largest after Vanti and Fidelity. So this is the scenario that we are posed with, and this disruption is not just affecting the hotel, the transportation, the telecommunication and retail, but extending itself to affect the other industries also.
Maya, I was very intrigued by looking at this number, and two of the data points which struck me was some of the learnings which banks can take away. If you see this year's sale, the mobile orders went up from 43% to 68%, nearly about 50% rise in the orders which came from mobile. Even the other point which struck me was, a year and a half, 2 years ago, most of us would have said Alibaba as a Chinese player, but that seems to be changing really fast. What they sold in 24 hours in this popular sale, they could sell it in 2 minutes this year. I think one of the learning which we have is essentially once you get a business model right in digital world, one can scale it really, really rapidly, and one can make it global very rapidly. Another example we saw a couple of months ago was Uber itself. When they took the 1 billion right and 6 months to get the 2nd billion. I think that's a learning which one can carry back, wherein some innovation which is happening in the banking world in one country, it actually will take no time to disrupt a bank in completely different country, because either the same provider or a new provider will latch onto that opportunity and make really, really quickly.
Completely agree, Puneet. In fact, Alipay itself processed almost 710 million transactions that day, almost 86,000 transaction peak per second kind of a number. Yes, it can happen anywhere else. So moving forward, Puneet, I would like to highlight on what's happening in the banking industry. If you look at while we talked about an Airbnb disrupting hotel industry, and one Uber disrupting the transportation industry, and one Alibaba and retail industry, and one WhatsApp and telecommunication industry. Unfortunately, if you look at today in banking industry, there are many such companies trying to disrupt the banking industry itself. The slide that we have in front of us talks about a crowded place. In fact, 6 months back when we looked at this situation, there were a handful of them. Today they are pageful. So that is the kind of disruption happening in the banking industry. And many of them are not expected to be reporting to a Federal Reserve or a central bank in any country, and they are eating into the banking business revenues. As per an estimate, because of this trend, the banking revenues will be at risk almost to the tune of 73%. They'll also be having an impact of 7 to 8% profitability impact because of this disruption. Their credit card and payments business is going to be disrupted to the tune of 25%, and their bank assurance business is going to get disrupted to the tune of almost 83%. And that is the kind of number which is looking at by 2020, which these disruptions are going to impact the banking industry. Having talked about that, if you look at reality, we did a survey and we found out that against the expectations of digital utilization in banking, we found that almost 16% of the banks, they don't even have a systematic digital strategy. Unfortunately, this has also been highlighted as one of the existential crises by a survey conducted by the Cisco and as well as University of Switzerland. They found out that because of the digital disruption, the 4 industries are going to be having major impact when it comes to digital vortex. Financial industry is one of them. And they have almost 49% of chances going out of business if they don't adapt the digital in a rightful way. So this leaves us saying that hardly 30% of the organizations have a systematic digital strategy, which has to be much more going forward compared to the other industries and as well as in terms of the expectations from the banking industry.
Recently one of the McKinsey report came out and it talked about how if the banks who get their digital strategy right today can potentially gain 40% higher return in profits, and if they don't get it right, they're likely to lose 1/3 of the profits which they today have. It's an interesting piece of work and also a reminder for all of us that how critical it is for us to get digital strategy right. What we've got on the screen is a quick survey for our audience today to see where do we see the biggest challenges, biggest barriers in their organization for getting the digital transformation right. While we request everybody to feed in their feedback so that we can all benchmark the situation we have in our institution with the rest of the participants we have today in webinar. Meanwhile, if you have any questions, we can take the questions now. Okay, Mayan, one question I see here from Mark. It says, what is meant by digital strategy, which 31% states do not have?
We will cover that, Puneet, going forward in our next few slides. I request the participant to just wait for now. I think the results, while it is coming in, I think it's clearly favoring that lack of unified digital vision across the organization, and as well as lack of skills and expertise stands out as the biggest hurdle when it comes to in terms of implementing an effective digital transformation in organization. Good insight, Puneet. I think we'll now proceed in terms of explaining what exactly is the capability that banks should be looking at when it comes to in terms of talking about digital.
Right, and I think the survey results in some ways are fairly similar to what we see in our conversations with banks elsewhere, wherein essentially it's the first is the piece on issue and the second is the ability. How do you execute on that vision?
Okay.
And
thanks, Puneet. So just to answer the question that we received some time back, can we really articulate what is truly digital banking and what are those 31% of the banks that we feel that they have a digital environment? So basically, when we speak to banks, as Puneet mentioned, Pinnacle is being used in more than 194 banks in 94 countries, and we have more than 70,000 branches on Pinnacle. And on top of it, we also interact with a lot of prospective banks looking at implementing and transforming themselves in the banking industry. The first and foremost question that we ask them, what do they mean by digital in their strategy and vision communication? So most of the banks come back and say that if I add a mobile banking channel or an internet banking channel to an existing assisted channel, that becomes mobile, that becomes digital. Or in the existing channels, by adding few more services or making sure that few more financial transactions being delivered to the end customer, or adding a mobile tablet or another mobile device to extend the transaction set to the customer, they feel digital. And in some of the banks, they also feel that by linking in some of the discrete transactions by a workflow, thereby they claim that that is digital. And as well as some of the banks we have spoken to, especially the large banks, they feel that on the legacy platform, you try to link few process orchestration, that becomes digital. Unfortunately, none of these actually count in the change definition of digital, or more importantly, what we mean by truly digital. So in that case, what exactly is the truly digital environment that we are going to talk about is covered in next few slides. Let me start off by giving, based on our assessment, research, and survey, and we have found out that largely the 4 standard characteristics that define what truly digital is. Let me cover that one by one. The first and foremost is, I think customer is going to be the focal point. Every industry that we spoke about earlier disrupted by not focusing on the customer, and the success of an Airbnb or a Uber or a Alibaba or a WhatsApp, they've all concentrated on what customer wants and simplifying his life. If you look at today, globally, more than 50% of the global population is less than 30 years of age. Almost 96% of that population is connected one way or the other on the social media and social networking. And when we conducted a survey asking them what exactly this generation wants from the bank, almost 87% of the population talked that they would like bank to respect their opinions, inputs, hobbies, feedback, likes and dislikes. And almost 84% of the respondents came back and said that after having respected their attributes, the bank should come out with offering specific and contextual products and services to them. And almost more than 80% of them said that these banks have to reward these customers when it comes to in terms of being loyal to the bank. Unfortunately, against that, today the ground reality that we found out based on our FMAR survey, that not more than 30% of the bank even have a single view of the customer. Having talked about that, this generation is the most connected, most informed, most educated, and most opinionated when it comes to in terms of every industry, and that is not leaving banking industry as an exception. And they demand accessibility, affordability, convenience in everything, and the whole ecosystem has to come into play to make sure that the banking experience is seamless, and they want all the banking experience to be integrated end-to-end so that they get the seamless experience. Based on that, what we are recommending here for the bank, so in their journey to become truly digital, the first and foremost is they should have a lot of flexibility for them to innovate. Unfortunately, we have found out that many of the banks have the legacy environment and platform which may not provide them to innovate. So this is where it requires in terms of the strategy of looking at renew and new, which we're going to talk about at a later point in time. The second and the most important point, the customer touch points has to provide a common and a unified experience. This is where the omni-channel hub requires to be implemented so that you have channel hopping capability, channel context being maintained, and the customer will have a unified and a seamless experience across channels, and the bank also gets a similar view. And more importantly, while more and more things are becoming digital, at the end of the day, the security also is a concern when we speak to most of these customers, and it has to be a cool, efficient feature of a security being built in to provide that kind of a environment for them to move towards providing that kind of an experience. Having talked about that, let's now look at in terms of what exactly that relates to in a video that we have captured from the experience point of view.
What if you never had to choose between good user experience and robust security? What if you could get both all the time? What if you could onboard a customer remotely? What if your customers could sign in by just looking at your app? What if your customers could transact by just tapping their smartwatch? What if your customers could authenticate and approve transactions without ever having to remember a password? What if all this is just the beginning? Get ready for the frictionless banking experience.
Okay, that was the first element of what we are talking about going truly digital, which is around creating a frictionless banking for improving customer experience focal point. The second important characteristics of a truly digital bank that we're talking about is putting the ecosystem in front of everything. So if you now equate that what an Airbnb or a Uber or an Alibaba or a WhatsApp has done, they've effectively and efficiently tried to bring in the entire ecosystem and the players and the service providers, the payment engines, the banks put together. So a person who wants to use an Uber or an Airbnb, he does not have to learn, he does not have to unlearn, and more importantly, he is not expected to run around to make a payment. All these things happen seamlessly, and within seconds of downloading, you should be able to up and running and using that application. And more important is in terms of the connectivity of that to the end points. If you look at Airbnb I talked about, they are present in more than 37,000 cities. That means they have more than 2 million listings. So all the 2 million listers also have a similar experience when it comes to the ecosystem, and same true with the Uber. So having talked about that, in the banking industry, we are also mentioning to bring in that kind of an increased efficiency by linking in all the ecosystem so that you remove the fragmentation. And more importantly, opening up the banking APIs and as well as the banking network for the people to now come in and make sure that they create that kind of innovative and creative products. And this requires, if not voluntarily, going forward, regulations like PSD2, which is the Payment Service Directive 2 in Europe, is going to demand that from the bank, where banks have to now expose these APIs to become a lot more open and a lot more bring in that open economy. So in this environment, our recommended approach and the journey to become truly digital is to make sure that banks should have an open API-based banking environment, and this is going to be mandatory going forward. What used to be options earlier become compulsions going forward. The second and more important element is make sure that all your applications are standard compliant when it comes to in terms of compliant with the open standards, whether it is ISO 222, a BIAN, or an IFX, or ISO 27001. And more importantly, leveraging the business networks, because in isolation, banks will not be able to survive going forward. It has to bring in that co-opetition, work with the agencies, work with the fintech ecosystem, work with the partners like insurance, telecommunication, retailers. And around 3 years back in 2013, in our viewpoint about what is going to be the trends for 2030, we did talk about banking is going to be a gang of four, which included the retailer selling the banking products, the telco, which is going to run the entire processing for the bank, and the technology company, which is going to provide the technology platform, and the fourth one is the bank itself looking at manufacturing the products because they are good in that domain and risk management. So the gang of four is going to be the banks, the retailers, the telcos, and the technology companies. And that is where it's required to be bringing that kind of a business network. Having talked about that, let's now look at in terms of how this can be achieved from the perspective of becoming in the journey of a truly digital. We are trying to play a video here.
Online shopping. People love it. And why not? It's fast, convenient, and easy. According to a recent survey, 85% of the world is shopping online. It makes perfect sense then for a progressive company to get online and connect with its customers. Small and medium businesses, in particular, will benefit immensely from an effective online presence. As a bank, how can you help your SME customers reach this goal? Presenting the Edge Verve Commerce Network, a solution that helps your SME customers create and manage their digital presence and sell their products and services online. It also helps them network with other businesses and build an ecosystem. Let's see how this works. Samantha is an art and craft dealer and also one of your SME customers who would like to be present online. With the Edge Verve Commerce Network, your SME relationship manager can lease out space to her. This becomes Samantha's online store, and she can use the platform to fully customize the store to meet her specific business requirements. The solution uses advanced analytics to provide rich insights to Samantha, helping her make targeted offers to visitors on her digital shopfront. What's more, all the payments done on this portal route through you, thus earning you additional revenue. The platform allows you to deeply understand the business of your SME customers so you can customize your offerings for them. And that's not all. Here is the truly disruptive power of this solution. Since this is your mall, you can reserve some space in each store for your bank's offers. This helps you to engage with the people who visit your SME customer's store, so you can acquire new customers and sell more products faster than ever before. Go ahead and build stronger relationships with your SME customers and help them accelerate their online success with the EdgeVerve Commerce Network.
Maya, it seems to be a great example of how banks needs to act like a platform and enable ecosystem around us, whether it is through APIs or whether it is creating such platform where people can take their businesses online. In fact, I remember 2 years ago, for our Global Banking Innovation Awards with BAI, we have Idea Bank from Poland and won an award for Global Innovation for their Idea Cloud, which was essentially not just offering banking services, but offering a host of ERP services which are typically required by small businesses being available on cloud, and banking being fully integrated in those services so that those businesses can run their business effectively, and as and when the banking is required to happen, it happens. And there are many such examples. Deutsche Bank is setting up a similar SME hub wherein they are connecting all their SME customers together so that they can do entire business dealings on the platform, apart from, of course, taking Deutsche Bank services on the same. So I think it's an interesting way of expanding the coverage of banking and going beyond what traditional banking products look like.
Exactly, Puneet. There are several other examples. Look at BBVA in Spain. They have created a comprehensive portal in their website for the external ecosystem to come and utilize their APIs to build apps. I think the journey is started. I think banks should leverage that to become a lot more ecosystem player. Having talked about the first two, which is the frictionless banking and as well as in terms of the ecosystem, the third and the most important element that we're going to present as a true characteristics of a truly digital bank is around insights. If you look at today, globally, a lot of data is available with banks. With no other industry has that kind of an access to data. The customer may go to a retail, customer may use a Uber, customer may use a Airbnb, but all the financial transactions reside in a banking environment. But unfortunately, banks so far have not leveraged this kind of data in an effective and an efficient way. So what we are suggesting here, banks can become truly competitive in this age by leveraging the data that they have. The data journey in terms of converting data into information, and information to a knowledge, and knowledge to a wisdom, to make sure that you have the right product to the right customer at the right place and the right price, and delivered in the right channel, is going to be a lot more important going forward. Secondly, and this is where I think banks are also have to struggle with, is in terms of management of the data, making sure that what is big data and what is small data, and out of that to eliminate all the noises and make use of the right data for the right purposes. And this is where, from a recommendation point of view, there's a lot of open source available for the banks to harness it, and Hadoop is one such environment which can process not just the structured data, but including the unstructured data. Because a lot of transactions happen outside the structured environment today, and that's where the insights can be gathered. And at the same time, this big data has to be an enterprise level. It cannot be just addressing one line of business. So it has to cover the entire gamut of banking at all life cycle and life stage of a customer. And more importantly, how to leverage the pre-built use cases so that you have the ready-made information. And Infosys has this kind of capability today, which brings in that kind of a combination of an open source based structured, unstructured, and an advanced analytical platform that can be leveraged by the banks to become a lot more contextual and relevant to the customer journey. Having talked about that, let me play a video which will give perspective in terms of what exactly analytics can play a role in this environment.
Data-driven insights are the lifeline of your business. It's not a surprise that 68% of banks have invested in big data solutions. However, 65% of organizations are struggling to get value from their investments. One of the big reasons is banks are tied down with generic solutions that are not designed to deliver industry-specific insights. Presenting the Finacle Analytics Solution, an advanced analytics solution that integrates banking data models and open source technologies to deliver contextual insights for the banking industry. With our range of pre-packaged business scenarios, you can sell personalized products, minimize risks and fraud to contain losses, increase operational efficiency. What's more, you can create new business scenarios based on your need within days instead of weeks. With Finacle Analytics, you can analyze data from any source in any form. The solution's predictive modeling capability gives you actionable insights at the right time to make the right decisions. Finacle Analytics is instant and delivers real-time insights. With its self-service options and intuitive visualizations, the solution can be used by anyone within your bank. What's more, the solution runs on non-proprietary hardware, so you get more value from big data at a fraction of the cost of proprietary solutions. You can deploy the solution in less than 8 weeks as a standalone big data solution or as an add-on to existing proprietary tools. Give everyone in your organization the power of fast, contextual, comprehensive business insights. Embrace the big data revolution and create a strong, insights-driven business with Finacle Analytics Solution.
So Maya, let's there are many questions which have come in while.
Okay.
Before we move ahead, I think it's a good time to have a couple of those questions, and I'm gonna just take a couple now, and others we'll do after a couple of slides when we have the survey.
Okay.
I think the first question that came was, what is Omnichannel Hub?
Okay. Very interesting question. See, today, if you look at it from a journey point of view in the banking context, banks started with branch as a channel, then added ATM to it, then they slowly added the internet banking, then mobile came in, and now kiosk and self-serviced environments. So unfortunately, what has happened in most of the banks, today all these channels are implemented and installed in silos. They don't talk to each other, and absolutely there is no connection or context switching between these channels. And some few years back, around 5 years back, banks started talking about multi-channel, where they started offering multiple channels, but again, the contact and the connection between these channels was missing out. The Omnichannel Hub is expected to remove all those hurdles, and Omnichannel is going to be a one single common unified channel hub, which provides a seamless transmission of information from one channel to another channel. And we have seen that from the data point of view, a customer starts a transaction almost 56% on the desktop, and almost 50% of them starts in the tablet, and then they complete it in mobile. So this kind of seamless transfer of transactions from one channel to another channel is expected, and that's when the omni-channel comes into picture, which provides a common framework for maintaining the channel rules in one place, the limits, the exceptions, the transaction rules, the master data, and which can also be an user experience, customer profiles maintenance, and all of that. And it can be agnostic to the host systems that the bank may be using it today. So in essence, the Omnichannel Hub is one single a place where all the channel-related information, including the channel hopping capabilities, are maintained to provide a common and a unified view and an experience to the end consumer on the consumer side, and to the same view to the relationship manager and the bank on the bank side.
Yeah, and it's very interesting, Maya, that while today most banks would have got online and mobile banking right, some of are getting social right, some others are talking about variables, and some have got them right. But the channels continue to just expand. Tomorrow we would have smart cards. You might be doing banking on those dashboards. You might tomorrow have a smart walls. So a lot of new channels are going to continue to emerge, and this kind of omni-channel hub could make it a lot more easier for banks to add banking capability in those channels.
Exactly, Puneet.
I think there's another question which came was around the options customers have. They have options of getting financial services from banks. They have options of getting from NBFCs, non-banking financial services provider. Then you have these days new payment services provider coming in variety of countries. How do we ensure that the customer sticks to the bank?
Very interesting question, Puneet, and this is what most of the banks also ask when we go and talk to them. See, today bank has that unique position of being the trust provider when it comes to financial matters. I think that unique position cannot be shaken by any other industry. But what is lacking and what is actually a cause of concern for the banks is they're not able to map up to the expectations of the changing customer demands and behavior, which I think these unique players are trying to play that role. I think it's a matter of time where banks have to now look at in terms of tying up, preparing a cooperative environment by collaborating with the service providers and making sure that they also have those kind of capabilities from an end consumer experience point of view, which not only provide trust, but also provides what the end consumer wants from the perspective of convenience, the affordability, and the attractiveness for doing financial transactions. I think some of the banks have already achieved that. So it's going to be a combination of technology and as well as in terms of business model changes that the banks need to look at.
Absolutely.
Okay. Now let me go to the fourth and more importantly the point that is going to bring in a lot of efficiencies, and to answer the previous question that you asked, Puneet, is to look at creating that kind of a seamless experience by automating ubiquitously. So today, more and more customers are looking at the seamless experience, and they want all things collaborated, connected, and they want it to be transacted in a seamless way. And it is not just the speed, but the speed at a rate and the price that they want. And more importantly, from the front office to mid office to back office, having a real-time online view and the transaction processing capabilities in a comprehensively automated way. And this is where some of the fintech startup companies and as well as some of the other organizations are able to provide that kind of an experience. From our own recommendation, based on the situation that we have seen in banks, it's more important that banks now look at leveraging the artificial intelligence and as well as self-learning systems implanted in their existing environment. And at the same time, look at what are the processes that requires to be comprehensively removed, what are the processes that require comprehensively automated, and what are the processes that require manual interventions. So once this kind of segregation is done, I think banks will be able to now provide that kind of an experience to the end consumer. And this is where RPA, which is the robotic process automation capabilities, can come in handy for the banks. And we do have an offering there in the form of an assistant. Not just that, I think more and more people are now talking about and understanding and appreciating the blockchain being the biggest disruptor after the internet is going to provide that kind of a comprehensive automation when it comes to processing cross-country, cross-currency transactions on an open ledger. And I think banks should be now looking at leveraging these kind of technology to make sure that they are not just automated, but at the same time, those benefits of efficiency and effectiveness is flowed back to their improving their return on assets and return on equity. Having talked about that, let us look at a video where it's going to educate our participants in terms of how a blockchain can play a vital role in the automation industry.
In just a few short years, the world has gone from blockchain what to blockchain wow, changing the world as we know it, one blockchain at a time. $20 billion. That's how much Santander Bank estimates banks will save on infrastructure costs with blockchain technology. Barclays has already announced they're undertaking 45 experiments on this technology. What about you? Are you leveraging blockchain yet? You can now. With the EdgeVerve blockchain framework that's tailored exclusively for financial services. The EdgeVerve blockchain framework accelerates the creation of blockchain-powered networks by offering a broad range of services. It is a permissioned ledger so that you can run your business with utmost security. It is asset agnostic and extensible so that you can transfer any kind of asset within the network. Finicle's research arms in Ireland and India, including several blockchain black belts, are collaborating with our global clients to create blockchain-powered next-generation networks in the area of trade finance, payments, smart contracts, syndicated, and corporate loans. We invite you to begin your blockchain journey. Join us to form a community network. The next-generation banking ecosystem awaits our partnership.
Interestingly, even before we played this video, there's a question from the participants saying that can we know more about the blockchain? So certainly we can do that, and we will have a follow-up discussions on that, and we do have enough information and material to educate and as well as create awareness around blockchain and the usage of that in the banking industry. Having talked about these four imperatives and the characteristics of frictionless banking, the ecosystem coming into play, the insights, and more important, the last one is the automation. So how do we now assess this against the reality that we have seen in the banking industry? Unfortunately, we found out that almost more than 84% of the banking IT spend today is happening on keeping the lights on, and they are able to spend money only on the business as usual, unfortunately leaving less than 16% of their IT budgets to be invested on innovations and creativity and things like that we talked about. This is a major bottleneck when it comes to in terms of in their journey to become truly digital. Having talked about that, and this is where we've been propagating banks to look at, it is not going to be a rip and replace one day, all branches, all customers, all channels, all your host systems are going to be becoming truly digital. It has to follow a dual strategy. The dual strategy is going to be renew and new. Renew the existing core businesses, which will take a lot more time when it comes to in terms of its own transformation, but at the same time make sure that you have enough to create new things around innovations, around creative products and solutions, leveraging the latest technologies. It can sit on top of your existing legacy environment and still provide that kind of benefits to the end consumer so that you don't have to lose out on what's happening with the fintech and the other disruptive players. But of course, one of the key advantage that banks today have because of their presence for the last so many decades and the banking practices is to keep that the culture of learning going forward, continuously learning, and as well as implementing the creativity and the purpose around being in the business. And this is where I think the banking industry will have an added advantage over any other player who comes in and tries to eat into the banking business. Having talked about that, we will now look at another survey, which is going to be focusing on, given a chance to the bank, what are the new technologies that the banks are currently planning to invest, have started investing in this financial year. So we have listed out the technologies like blockchain, advanced analytics and big data, cognitive computing, and mobility and wearable, and open APIs and cloud. So we request the participants to please go ahead and vote and let us know in terms of what exactly your organization is investing or planning to invest in any of these technologies.
Meanwhile, Maya, I think let's have a look at the questions which have come. The first question is talking about could we have hands-on on edge for blockchain framework?
Obviously.
I think yes. What we would do as part of this webinar is when we send out the recording, we'll also send you a link on where the blockchain framework and the various demos which we have are hosted. Feel free to experience it at your end as well as ask for a meeting for where we can take you through that subject in greater detail. I think one of the questions also was this, in terms of omni-channel, how about security? Does implementing omni-channel hub in some ways compromise security or?
It's a very interesting question, Puneet. I think we have come across these kind of questions from other banks as well. See, security is a journey. It is not a destination. So banks have to now look at this being part and parcel of the digital. So while we are not specifically called it out, but we have researched around it. But what is expected from the end consumer point of view is, while omnichannel will bring in that seamless experience for the end consumer, but at the same time, the security also had to intertwine with that kind of an experience, become a lot more simpler. while the security quotient has to be increased, but should not hamper their banking experience. So the experience and the security has to go hand in hand. And of course, as the technology is evolving, there are a lot more capabilities for banks to leverage the latest in that security arena. In fact, recently we also launched and jointly with the partnership with OneGenie, where there is a facial recognition-based logging in, and as well as in terms of the whole process of opening an account and a customer is going to be a simpler 3-step process. And once logged in, the whole experience is going to be based on biometrics, facial and retina recognition, and including for the transactions, the bank, if they want to implement multi-factor authentication, I think they should be able to use the mobile only. So here what we are trying to suggest is take away passwords. It's the death of passwords, but bringing in the more and personal aspects of biometrics and the facial and things like that.
So meanwhile, we have results on the screen, Maya. I think
interesting results, Puneet. If you now look at in terms of the audience poll is also talking about what we mentioned earlier. Highest score is gone into the analytics. I think that is very well in tune with what we talked about as the third characteristic of insights. Mobility and wearable, this is where we talked about the ecosystem, which is the second characteristic, where more and more things have to be brought in and increase the customer experience. And the last one is in terms of the blockchain. I think this is where I think banks will be now exploring and trying to leverage in a much more proactive way going forward. So let's now move into the next set of articulation. So this is basically talking about what we as an organization we are trying to do and help the banks in becoming truly digital. And as I mentioned earlier, we are part of a $9.5 billion consulting and technology company called Infosys. And Finacle is the flagship product which has been there in the industry for the last 24 years. And this has been supporting more than 194 banks globally and present in more than 94 countries. Today we have almost more than 850 million customers, more than 1 billion accounts being processed on Finacle. And we cater to almost 16.5% of the global banked adult population. So 1 out of the 8% is touched by Finacle in one way or the other. We are present in all 6 continents. And from the offering point of view, we bring in a comprehensive solution set around core banking, which is our flagship product. And along with that, we bring in the CRM, the treasury, the internet banking, mobile banking, the omni-channel experience, and the payments. So with this, bank should be able to take that the leapfrog into becoming fully digital. Not just that, we have also been part and parcel of the analyst rating for almost 9 years now. And we've been covered by all the analysts, and we are the only vendor who can claim that being in the leaders quadrant of the magic quadrant for the retail banking for last 9 years. And similarly on the Forrester Wave. And it's not just for the core banking. Those kind of endorsements and recognitions have extended to our channel solutions, our CRM, our treasury, and many other solutions. So in this slide, we have put together one chart where we stand out when it comes to predicting our leadership on the retail core banking, and on the other Forrester Wave around our omni-channel offering. So with this, we move into giving you some perspectives how some of our customer banks have leveraged these technology platforms to become truly digital. The first and foremost is a bank from India. It is the second largest bank, a private sector bank in India. They started journey with Infosys Finacle. And when they started journey, they were around less than 2 million customers. Today, they have more than 56 million customers. And they were around less than 110 branches. Today, they have more than 5,000 branches. The data is of 2015. And they have more than 6,000 ATMs. And their asset size has grown from anywhere between 4.5 million to more than 100 billion in 2015. And the revenues have grown from 3 million to almost 9.8 billion. More interestingly, if you look at the transaction mix, way back in 2001, almost 94% of the transaction used to happen in branch, and less than 6% of the transaction used to happen only from the other channels. Today, in contrast, if you look at, almost 87% of the transactions happens outside branch. That means through the online, to mobile, to ATM, and to call center. Only less than 13% of the transactions happen through branches, and largely it is around the marketing and advisory services. So, but not just in terms of the leaders when it comes to in terms of technology usage, their technology costs are anywhere between 10 to 15% of their global peers. And this is where I think the usage of the technology and comprehensive exploitation of the technology to the fullest extent is also going to be making sure that you are not only leverage the technology, but go beyond what technology offers when it comes to in terms of innovations and creativity by being leader in the market space. And they have been with us and they have renewed and been with the latest versions all along when it comes to in terms of adoption of the latest feature. And they are the first ones to go ahead and launch offerings around Facebook banking, around Twitter banking, and many other solutions. Let me now move on to, while we spoke about ICICI as a bank, but we have also three distinct players who are getting into banking, but they have also have their own unique offering when it comes to in terms of retaining their identity, but leveraging the technology platform. The first and foremost is the Zuno Bank, which is a subsidiary of a Raiffeisen Group in Austria. And this bank, because of the financial crisis, decided to launch a direct-only or internet-only bank. And they have launched this solution across multiple countries. And today they have more than 800,000 customers. They have more than 2 billion euros of deposits being garnered. And with the success of this model, they are now looking at launching it in other businesses, other countries as well. The second, an interesting story, and this is a digital wallet service provider and as well as the e-commerce provider from India, a company called as Paytm. And this company has broken a lot of records across the globe, and specifically in India. Today they have more than 120 million subscribers, and what it took for a public sector bank in India more than 150 years to achieve, and this entity has achieved it in less than 36 months. And they have a target of reaching more than 500 million customers by 2020. And fortunately for them, they've also got a payment bank license, and it's going to be a bank from converting themselves from a digital wallet and a e-commerce provider to a payment bank solution provider. Interestingly, this entity has been invested by who's of the world, including Alibaba from China. And Alibaba wants to now replicate the success that they have gotten in China in India, because India is a market which has the potential both in terms of the demography and as well as in terms of the growth aspects. The third thing that I wanted to talk about, an entity which is more than 150 years old. It's a postal organization of India, and they decided to go completely in a transformed way. And they have more than 150,000 branches, 200,000 users, more than 200 million customers. And this entity has selected Finacle. And today, almost more than 150 million customers are on this platform, a Finacle platform. And recently, they also got a payment bank license. So they are also going to be a full-fledged bank in next few quarters. What is more interestingly, in these three cases, you have a traditional bank looking at launching, changing the business model and going into a direct banking business model. The second one is an entity which comes from a completely a non-banking or a non-financial services background, but getting in big time into financial services. The third one is a non-banking, but a 150-year-old organization, which is now looking at competing effectively with all other players by bringing in the might of 150,000 branches, 200,000 users, and 200 million customer base. And this is where I think Finacle is covering all of them together to make sure that irrespective of the background that you come from, you have a solution in our offering so that you can leverage and go forward from there. The next entity that I wanted to cover from a case study point of view is a bank from US. This is called as Discoverer Financial Institution. And this is the largest card servicer in the US. And today they have more than 80 billion in assets and almost 3 million customers. This bank has gone live completely on a direct bank mode. That means they offer the services on an internet-only mode. There are no physical branches or physical infrastructure. And this bank has to now comply with all the 50 state regulations in the US, and this is the first bank to do that on the Finacle platform. And the results of, or the impact of going truly digital from day one and launching an internet-only bank, they are now able to reduce the number of processors that they used to have earlier from almost 20 to 6, which is giving them almost one-third benefit when it comes to cost efficiencies. The second one is the end consumer experience. This is where we talked about improving the customer experience, and they are able to now do their transactions and request with a lot more than what they used to do, a lot less than what they used to do, almost 40% fewer clicks that they need to do, so that they save time and as well as improve the efficiency. And their account servicing costs have almost come down by 2/3, and this is a significant benefit into their IT investments. Whatever they are saving it, they are flowing it back to create innovative products on this platform. And more importantly, when it comes to the customer interfaces, they are able to now reduce it from almost 20, which was there previously, to 1, and which is bringing in that seamless collaborative way of linking into the ecosystem that we spoke about earlier. With that, I think we will go to the next survey, which is basically asking around which are the application areas given a chance for you to prioritize and you would like to go ahead and modernize in your banking landscape that you have or IT landscape that you have. This can be looking at, yes, I want to now go for omnichannel, or I would like to now set my foundation platform in core banking right, or it can be looking at standalone payments so that you leverage the payments business which is growing, and things like that.
Meanwhile we have these inputs on the survey, I think it's a good time to take a couple of other questions which we have. And we are close to the end of the webinar, while we will send out the material, we will also share our contact details, and feel free to engage with us on these questions even after this webinar. I think one of the questions which we had was from Saurabh, which is about are there particular domains in banking or lines of businesses banking where blockchain is more relevant than others?
Very interesting question, Puneet. Yes, Saurabh, we've been talking to banks for last 6 months. If you want to now take it from a stage-by-stage approach, the blockchain can be immediately leveraged in your remittances and payments business, which takes away the dependency on the networks and the SWIFT messaging and reduce the cost on that. The second stage, what we are looking at banks are trying to implement is in the identification areas where your KYCs and the know your customer policies and the entire process can be on blockchain. The third phase where we are looking at banks showing a lot of interest is completely converting their trade finance transactions onto blockchain, whereby they are going to reduce the time taken for trade finance transactions and as well as make sure that they simplify the whole transaction by putting into a digitized environment, by paper documentation converting into a digitized documentation. Then you have the whole financial transaction being online real time and whole SWIFT messaging being replaced with the blockchain references. So these are the 3 most commonly come across use cases that we are witnessing. Apart from that, some of the banks are also looking at implementing invoice financing, then syndicated loans. Then they want to look at some of their treasury products being put onto blockchain. And in some of the areas, banks are also looking at bringing in securitization, and more importantly, in the capital markets and insurance space, banks are looking at leveraging blockchain as well. To summarize, payments and remittances, identity services, trade finance is the top priority for the banks.
And I think meanwhile we have our survey results also online, and I think it's no surprise that the top priority for investments for this year seems to be around omnichannel hub capabilities, so that we can service our discerning customers effectively on a variety of channels they want to engage with. And again, a repeat of what we saw in the previous survey, wherein analytics continue to be our favorite for investment area, and fast followed by one of area where we've seen a lot of innovation, payments as well as online banking. So
interesting, Puneet. Yes, I think this is in tune with what we've been hearing in the market as well. So with that, let me move on. And this is where I think a key message for all the participants and as well as what we have learned from interacting with the global banks. This is the time to go truly digital. And here is the partner where we are looking at eagerly elevating the banks from where they are today to become truly digital. And we have received few questions around follow-up calls and follow-up demos, and we'll do that. And if you have any other questions, any other clarifications, or you want to know contact one-on-one, so it will be easier if you can send these questions and connect with the chairperson. So with that, we come to the end of the today's webinar. Thank you very much for all your contribution and all the questions, and hope it was useful. And we know that the journey is not easy, but at the same time it's going to be exciting and challenging. I think together we'll be able to make sure that we live up to the expectations of the changing dynamics of the global customer, the ecosystem play, and as well as in terms of leveraging the analytics and the network capabilities to make sure that we are staying ahead of the curve when it comes to the play in the banking industry. Thank you very much.
And just the last request, we all will be getting a survey on the feedback of this webinar. Please do take 2 minutes to give us that feedback. It will ensure that our communications and webinars henceforth are a lot more effective. Thank you for joining us today. Have a great day ahead. Goodbye.
Thank you.